That was an interesting take on the screen there. I wonder what happened. Well, good morning. It is May the 11th, 2016. Time to kick off another trading day. No news out overnight to really drive the trading. No news on tap this morning to drive the trading. The E-mini caught a little selling last night, but really hasn't broken 2070. My guess is our market will swing on which way the E-mini trades today. And the E-mini is still pointed higher, which could pressure our treasuries. If there was going to be a weak auction, it would be the 10-year auction. So while I do have a bias to the buy side, I'm a little cautious on pulling the trigger. Support begins at 20. So our first buy is 17 to 21. I'd like to get that done closer to 12 to 16 than 16 to 20. Second buy would be 9 to 13. Crude oil is the only news we have. API's 1.46, but overall inventories grew by 3.5 million barrels, so 1.46 at Cushing. The EIA they're calling for a tenth. If there was ever a number that would consistently come in higher than forecast, it would be inventory build at Cushing. Other than that, there is no news. So 10-year auction dynamics, which says the market can trade lower a little bit versus the direction of the E-mini, and I think that's it for what's going to drive the trading today. So maybe not a whole hell of a lot going on. Looking at the 30-year. We've got resistance at 24 to 28. So 31s to 03s, sell one. And I don't think they'll take it up because of the 10-year, 7 to 11 for sell 2. On the buy side, support is 12 to 16. Area that could hold. 5 to 9 would be buy 1. And then 29 to 01, buy 2. With no news, anything out, I just think the auction dynamics are such that it'll create a pretty tight trading range, and won't be a lot going on. Obviously, buying against 165 even, a round number, would be the ideal place to do it. Gold was up a bit overnight, didn't break out to the upside. One of the big names on Zero Hedge, I think it was Pete Singer, I'm not sure, said gold is a good buy in these areas. And again, I just think people, when they get the opportunity to buy, are going to buy. It's just, and it's not a, it's not for trading profits. It's for have something in the bank. Okay, 80 to 82. So 79 to 81 will be sell 1 on gold. We're going a little bit higher. Have this spill over here from 85, so 84, 86, sell 2. Pick up this area right there. On the buy side, and broke out from Asia at 73. We're at 78, so I'd like to get it done at the lower end of the range, but so 75, 73, buy 1. Pick up that high volume number, 69, 71, buy 2. Not afraid to buy into weakness on gold. Not to say that it can't sell, but I think gold's, if you don't like what happened today, wait a couple of days and you'll have a smile on your face. Kind of like the E-mini. got Janet Yellen on your side and every other central banker in the world. Don't look for follow-through selling on stock markets. You know, everybody howls and whines and complains about how unfair it is to have rigged markets until they look at the value of their stock portfolio. That's why they don't squawk too loudly. And the politicians know this. Okay, 15 to 25, sell one. It's where resistance is. Then it jumps up to 50. Sell two. Sell side's pretty aggressive. It's where we are. On the buy side, 114.12, so 13.90, 114 even, buy one. 13.75, buy two. I don't see a lot going on with the euro today. Famous last words, right? And that's one of the things, you know, you cannot predict trend days. And the reason they're trend days is that nobody does predict them unless they're associated with news. They kind of happen out of the blue. And you'll just get wave after wave of buying or selling as longs liquidate or shorts cover, and more likely to the upside on short covering rallies. But trend days are absolutely unpredictable. Everybody, I can remember so much time in the late 80s and 90s, everybody was trying to predict what would be a trend day, and could not be done, except for when there was obvious news, big news. And then you had the position in front of that news to reap the benefits, and everybody's kind of reluctant to do that. Okay, crude oil, 46 plus market, 43.50 minus, and we're at 44.84. So stops above 45, 45 and a quarter, sell one. 50 to 75, sell two. This is in spite of bad news everywhere. API showed a larger than expected build last night. Market rallies. Found it slow in London. And I think the reason for that is that the central banks have figured out that it's a hell of a lot cheaper to screw with the oil market than it is to mess with the fixed income markets or equity markets. It takes a lot less capital to push a futures contract around. So if they can keep crude oil at 40, 45 bucks a barrel, then they can stabilize equities. They can take that pressure out of the market, and they can keep the stock market high like they want to. Everybody's a winner, right? Okay, looking at the E-mini, everybody talked about how stocks dumped last night and sold. Europe was off. Asia was off because of Hong Kong. But the bottom didn't fall out of the stock market last night anywhere. So looking at our bar chart, 35 buyer, 2100 seller. We're a little bit over halfway up on that. A break in the market is here in the 75 to 80 area. You can see it off that high. You can see it that high. You can see it off that low right in here. So this 75 to 80 area is pretty good resistance. And if we fail to take that out, then the market might come back and test support at 50. The key right now is whether we hold the 70 area. If we can hold 70, then we can trade higher. The attractor on the F1 screen with 4-point increments is at 89 without a new piece of news. On the 180-day information, the attractor is at 86, 87. So, can we take out 70 or not? Right now it doesn't look like we can. So 69 to 71, buy one. 64, 66 buy 2, basically buying 65s to 70s. On the sell side, 79 to 81. A lot of good stops above yesterday's highs, 84 to 89. And structurally on this one, as long as we stay above 60, your trading target is 86.5. There's your attractor right there. I don't have a strong feeling one way or the other today. Nobody else probably has a strong feeling one way or the other either. And when you find yourself, when you can't make up your mind which way the market's going to go or most likely to go, then you're probably not alone, and that tends to yield trading range markets. Okay, take a bit to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible.